All right, so we could get into this on the flip side in a little bit, but well, right here. Damn, this is ugly. I want to move this. All right, whatever. So there's a pullback, whatever. So what do we see? Like right here, what do we identify right here? What do we do with this area right here? Somebody.
Point of interest.
Point of interest. Boom. Perfect. So why is it a point of interest?
That money.
Last up candle before the big down move.
Smart money has still buy contract.
Yep. Right. So what's right here? This is trapped money, right? There's trapped money right here. Right. So what I like to say is we come to like, you know, the mitigation. We come up to break even on this position, right? That's why we put this out here like this, because technically smart money is still in this buy position. They have so much money that they can sacrifice whatever they want, right? And then they just, you know, they come back to it, right? They're willing to sacrifice all this drawdown because, again, imagine they drop 500 lots to the upside and then 5 million lots to the downside. Like it's nothing, right? So price is coming back up, right? And then what I like to say is when it approaches our point of interest, it does the same exact thing that it did before, right? So as we can see right here, right, we got no mitigation out of it, right? So I'll draw it up right now. Right, so when we approach our point of interest, what do we design?
More liquidity. We got a double top.
Right. So why are we designing liquidity?
To take it back.
All right. Cool. So right here, you know, sellers can get really induced, especially when it engulfs this thing right here. Right. So what do we wait? What do we wait for? We wait for who to get behind the move?
Our money.
Right. Well, boom. Why would we enter right here?
Point of interest.
That's where smart money is mitigating their contracts.
Mm-hmm. Perfect. Right. Well, if we don't catch that entry, nobody say it yet. Right. What just happened right here? What did they just do?
They mitigated out.
Yep.
They closed
Mitigation.
Out of this position, right?
Break even.
Yep. So they broke even right here, and then they stacked on their sell entry because technically they sold right here too. Right. And remember, smart money wants the best entry. They don't want you to have that. Like, no, like they need that. Right. So again, we have these highs right here. And what did this do?
Throw people up.
Yep. Right. Because sellers got excited, then it screwed them over. Right. This is trap money again right here. And then everybody that bought this got screwed over. So this is just a whole disaster right here. Right. So what do we identify right here? At the distribution side, this is our up thrust after distribution. What do we identify in this area?
The up candle that's already out.
Handle.
Yep.
Down move.
Right. So boom. This whole area right here, again, we like to say at the body, the wick, the body, and 50%. Right. So why do we put it right here? Like why does price have to do that? What are they doing right here? Well, hold up. I'll put this. Give me a second. Right, so why do we enter right here? Why do we wait for this?
Sign that smart money's behind the move.
Yes, exactly.
Point of interest.
Yep, point of interest to point of interest, right? So just like Clint said, we could tell smart money got behind the move. How can we tell smart money got behind the move? Well, what they do here, they captured the highs, right? So they bought
Yeah.
to sell. You see this huge impulsive move to the downside? That's an inefficient move, which means price has to come back and rebalance this whole entire thing. So as I see it, is this is like the equilibrium right here. And we call it the mitigation, right? So previous liquidity, there's a lot of money right here, right? The candle that captures all of these contracts right here and confuses everybody, buyers and sellers, and then drops. There's a lot of trapped money in this area. So they come back. I guess you could say they break even on this buy and they stack on their sell entry. But they're coming right here to pick up all the leftover extra money right here, right? Because remember, they were correct and they were correct, but they just weren't patient enough for smart money to get behind the move and enter right here. Super low risk, high reward, right? right there. Mitigation, right? So again, it's the same thing over and over, right? So what did they start doing right here with these green candlesticks? What did smart money start doing right here? Louis, what did they start doing right here?
They started buying more and more contracts.
Right?
Mitigation.
Right? They started buying up, right? So
So they
really put yourself like that the whole entire way. Like everything, every move is smart money, like behind it, right? So you have to see like, okay, they're pumping price up after this huge down move, right? To come mitigate out of the previous liquidity to the last candle that did that thing, right? AKA point of interest, right? It's what we like to identify, right? So same thing here. Smart money technically started buying right here, right? They started buying right here. This is where they started pushing price up so they could sell it again, right? Well, technically, shouldn't they come back and pick up money from right there where they started buying up to the mitigation? Right? This whole market is ran off algorithms, right? So the market has to, get balanced, this whole structure, right? Price just has to get filled. So right here, boom, technically that could have been like another entry right there, right? So, right, seeing this right here, I'm going to draw this for you guys in the middle. Or you know what? Here, let me see. All right, so this whole area right here, this thing right here, this right here, right? It's this, right? So see how we mitigated out of this? This whole picture right here happened because we had to mitigate out of this. If you right-click drag and redraw a clone, so you don't have to keep redrawing those candles. Yep. Thank you, bro. It's a, it's a struggle drawing all these candles. But I'm gonna show something real quick before we go back to this. Again, to just keep it super, super simple. All right. So, right on the distribution phase, let me pull this up.
I just watched this. I just watched you do this.
Yo, since when did Google Images start becoming relevant in the market?
I don't know, man. There's only a few of them that work.
Inverted penguin all day.
Inverted penguins all day, man. I'll pull some of those up in a bit. Some penguins. Oh shit! What just happened? Okay, cool. So again, right, keeping it simple. We see this picture right here, but there's so much that goes into it. There's just so much. But again, this is just to keep it simple for our eyes. We train our eyes to see certain things. We're going to see through the candlesticks. Remember, these candlesticks were created to manipulate and control human emotions and to get people fearful and greedy, right? So everybody's fearful when they're in drawdown and they're greedy when they're in profit. That's just, how humans operate, I guess, or most of them, right? So right here on the accumulation phase, we could see right here, you see this W and then the spring down, right? So keep this picture in your mind, right? Because this part right here in the beginning, what are we focusing on? Well, we're waiting for this to happen right here, right? The spring, low failed volume sell off in the test. So just focus on this W with this spring and this test, right? Vice versa on the distribution phase. Focus on this double top, the up thrust after distribution, the test, and then the fall, right? So we're going to draw that really quick, right? The accumulation side, right? Boom, right? This would be our lows, right? Liquidity sits under here. What do we wait for? Somebody say it.
If you can.
Boom, right? Activating what? What type of contracts are getting activated when it goes below lows?
Sell stops.
Stops.
Sell stops, right? Cool. So sell stops, right? So they're using seller's momentum against them. That's why price breaks the structure and then it just, quick down move, fast move up, right? So boom, if we don't catch this right here, try it again. Right, so if we don't catch this right here, what do we wait for?
Mitigation.
Right. Well, we identified the candle that
Did that
took out did that thing, right? The lows, here's 50% of it, right? Just our point of interest, right? Why? Because they sold below the lows and they went up, right? So here you have your double bottom, right? Everybody's buying this, they're excited, right? They're super excited, and then they get shit on. Everybody that's selling this double top is super excited because they're in profit, and then it flies back up, and then they get shit on, right?
Yeah.
So again, it's a huge psychological warfare. Understanding that you really have to be patient in this market, right? Because the whole thing is just to induce people to be on the wrong side of the position. So we wait for the mitigation.
It's your point of interest.
To our point of interest. Yes, sir. Keep talking, right? And then what do? Boom. We take out
That high, that equal high, or
this high right here, that whole structure,
Yeah.
right? So then what does price have to do, right? So since this was your test, what happens after the test?
markup.
Someone tell me from the Wyckoff schematic.
Markup.
Retracement.
Jump the creek, come back to the equilibrium.
Yeah.
Yes, sir. Jump that creek. All right. So technically, this right here is like another point of interest, right? Why? Because this is where they push price above these highs, right? This is like a FU candle on this side, right? They bought price above these highs, and then what do they do right here, right? They started doing what? What did they start doing with price? They started
Pushing it back down.
selling it back down to break even on their last sell,
Yeah.
right? And then they close that, and then price flies up. It captures this liquidity. So then what happens when it captures liquidity levels? It has to
Come back.
it has to come back, right? It has to fill that, or that's imbalance, inefficiency, there's like a gap. Therefore, if you didn't get in there on that test, you could get in on the test of the whole entire structure, right? And then that goes back to here, here's your double bottom, spring, test, jump the creek, right? So it's literally squiggle, break, retest. Like that's how Jordan taught me. Like it's funny. Like he just squiggle on his chart and be like, "Do you see it? Do you see it?" And it's like, "Oh shit, I kind of see it." Like, and he would just scribble, and I was like, "Okay," like, and it made sense, right? Because you're taking out equal highs and equal lows, but you have to understand where they enter. You could tell money gets behind the move. How? It's an impulsive move like this. That's how you know money got behind the move, right? So again, right here, if you're getting on your jump the creek, right? Well, what is it?
Markup.
What do we like to say? Yeah, markup, exactly. Right, this is what we like to say because it's the same thing. Check this out.
I'm gonna get that tatted.
Yeah, me too.
Facts.
Who said that, Steven? That's good, bro.
What's good, man?
Boom. Right? Why is it the same thing? It's literally the same thing. Everything in this whole entire universe is fractal geometry. It's literally as above, so below. Like everywhere. Like everything you look at. Like just look it up. Watch. Yeah, just literally study fractals and stuff, and you'll see why. Right? Because it's the same thing on this side as this side, right? So here's your accumulation, right? Here's your double bottom, right? Capture lows, we retest, we revisit previous liquidity because we have to pick up all that money and we have to break even on where we stop people out and, tap the trap money. And then we break the structure and we come back and we retest the whole thing to do the markup, right? Then again, on this side, it's the same thing, right? We get equal highs, they get taken out above the highs. What kind of orders get activated above the highs?
Buys.
Buy stops, right? So what does smart money do? They use buyer's momentum to flip the script on everybody, right? To create trap money, right? So this is how you know money, money, we like to say, smart money gets behind the move. Big impulsive move above the highs, below these lows. That's how you know smart money got behind the move. Big impulsive moves like that, right? So then we wait for the test, right? AKA mitigation. And then we break the whole entire structure. And then what's after that on the distribution side? To break the ice, right? So again, here's your double top, capture above it. We come back down, revisit previous liquidity because we have to pick up so much money right there, right? And then we break the structure and we have to break and retest, right? So we were taught, right? Break and retest the structure because we have to fill that price level because that's how the algorithms work. Price just has to get filled, right? So as above, so below. Is that right there? So let's go back to this thing. Matt, learning the strategy also in the process of reading technical analysis. You think that reading this book is contradicting what I'm leveraging right now? So, yes, every book on trading, burn that shit or donate it to someone. Like, just get rid of it. Yeah.
We're trading in the zone, right?
Yeah, trading in the zone. Listen to that book. I mean, quarters theory is lit, but I mean, like technicals and all this other stuff, like the whole world is manipulated and controlled, right? For example, the book Outwitting the Devil was written in 1932. It wasn't published until 2010. This book talks about how and why 98% of the world are subconsciously controlled by negative energy. Was it? That's a whole. But yeah, so think about that. Who controls the media, right? All this, bullshit news that everybody's just getting spoon-fed every day on TV, right? And then the people who publish the books, right? The people who are control of the publishing companies, right? Like, I don't know if you guys seen that picture. I know some of you guys know the picture I'm talking about. It says like central bankers and stuff. They're at the top of like the food chain and they're eating, like they're eating. And then it has like I don't know, internet, and it says like baby pips, and it just goes down the chain, and they're all like shitting in each other's mouth. And like and then it says retail trader sitting there at a table, like he's sitting at a table, he has a plate right there, and he literally just has shit on his plate because that's what retail traders get spoon fed, like literally.
Whoever wants that picture, I got it. Let me know.
Yeah, drop that picture somewhere. Trading in the zone teaches the same as Buddhist philosophy. Yes, exactly, bro. Like you will just be detached. You have to be connected to everything, but detached from it, right?
Anti-Fragile is a good book for that.
What was that?
Anti-Fragile is a good book for that.
Anti-Fragile. I'm writing it down, bro. Give me a second, guys. I'm taking
That's
notes.
life-changing.
Anti-Fragile?
Mm-hmm.
Thank you, bro. Who's the guy?
Yo, drop all these books in the chat so everyone can have it.
Yeah.
I got a bunch of real psychology books for
nice.
The way you guys trade is really how I think of Anti-Fragile, because it's like you're way ahead of everyone, so you don't even have to worry about all the bullshit.
All right, well, This thing right here is tripping. Let's see. Cool. All right, bet. So right here, again, it's the same thing. But yeah, back to like the retail trading thing. Again, it's all about who you're listening to. So again, I may not have what you want, but I only listen to people who have what I want and who are where I like to be. So everybody else's opinion is irrelevant. Again, for those of you who are in Florida, if you're on this call, like X amount has been invested in this education, and it's all backed by credible sources who've managed hundreds of billions of dollars and people who literally compete in the Forex World Cup who are top 10. So, yeah, all the books, retail trading books, donate them, burn them, do something. So right here, right, again, it's the same thing, right? We have the equal highs, but we have candles in this part, right? So we see our point of interest to the left side. It's the same thing. Equal highs, smart money buys above, pushes down. That's how you know money got behind the move, right? Price goes above the highs and just engulfs and captures this whole entire movement, right? Which is, it's inefficient. Price has to pull back in this area. And if it doesn't, then this becomes a target for the future, right? So you can see smart money buys up to break even on this buy where they bought to sell, and they stack right here. The reason why they push price up to right here, so they break even on this buy and then they stack on their sell entry. But then again, the whole time when they're pushing price up right here, imagine they're buying, price up. Price is moving up, but they're selling the whole time as they're buying price up. Like they're selling, they're hedging. They buy and sell at the same time, like literally. And it's the same thing right here. They buy. The whole time they're selling. That's why you have that big move down. So back to this point, right? If this is our point of interest right here, right? And this is the distribution side of things, right? If we're looking left to get right, that's what we like to say. You got to look left to get right. We're approaching point of interest. We design liquidity. We take it out. We mitigate out of that at the equilibrium. And we're just mitigating out of the mitigation, right? If that makes sense. So right here, right, this is this side, but check this out. All right, and again, guys, any questions, any comments, just feel free. Like, just go ahead.
That equilibrium, I still never ever got that.
Okay, so I'll go over it right now.
Appreciate it.
Got you. Hello. 111.
11-11.
Oh, yeah, it's 11-11 for you, huh?
Still aligned.
Same thing, man. Times there's this construct that just doesn't exist. It's crazy. Like me and Mike Miles, like honestly, like Jordan and everybody, like they go to sleep early and stuff, but I'm not gonna lie, I'm kind of like a night owl. I stay up and stuff, and I just say like observe the masses, do the opposite. Like it's just hilarious. But think about it: someone's waking up right now, and then someone's going to sleep. So like, what's time? They're all belief systems. It's all belief systems. But check this out, right? Again, it's the same thing. That's below, right? This is this side. Boom. Now what do we have over here? We have our double bottom. Price falls below. It moves up. We do the markup. This is our distribution phase, right? Boom. We come down. So what happens when we approach our point of interest? So what do we start to do? we start to design liquidity, right above our point of interest. We push price down below. It smacks right here to technically mitigate out of this right here, right? That's how you know money got behind the move, because they sold below the lows to this point of interest, and then it reversed and they bought it up. They pull back to mitigate back to the equilibrium. What we're saying is this whole area right here, right, is full of liquidity, right? Let me change the color. Right, where the eyeball's at, there's a lot of money sitting right here, right? Right, so who was asking the question? I forgot.
About the equilibrium?
Yeah,
Yeah.
cool. Oh shit, we got TTE in the building. I don't even know. What's good?
Yep.
Yo, what up,
Oh, we
Matthew?
got all TT. Damn, I got the fam here. What's good, guys?
Yo, we're night owls too, bro.
Hell yeah, man. Let's get it. Yeah, that's why y'all be catching everything, bro, in the morning. Like
Yo.
Yeah,
yo.
super lit, bro. Yo, I want everybody to hear from you guys in a little bit once I finish doing this. So stay put. So right here, right, this is where our liquidity's at. Well, if this is a target, we're gonna take it out, right? But again, it goes below the liquidity. All right, that's all liquidity, but it goes below this whole structure, right? So again,
And that's because they're trying to break even, right?
Right here, they're breaking even on this sell from over here.
Yeah.
Right? Because they're inducing buyers this whole time to get people on the opposite side of their trade, creating this double bottom, designing liquidity right below, right? You know, like how we like to say, you know, how Zach says all the time, it's these are pockets of money, right? Yep. So they designed this huge pocket of money right here, right? Just imagine, like, as soon as it hits it, it's just like a bunch of coins. Like, imagine that noise, like from a video game or whatever.
Mario.
Yeah,
Mario.
bro. Like you're hitting you're hitting the box over here, and then boing, and like just coins are coming out, and then it just flies up, right? So what they did here is they sold to buy, right? Liquidity. So our mitigation would technically be the equilibrium, right? Because that's where our previous liquidity is at, and you know, the FU candle, the candle that did that thing, the candle that stopped everybody out, the candle that hit the point of interest, you know, right where that candle opened, or 50% of that at the previous liquidity would be considered in equilibrium. That's why I say that, because it's in equilibrium. It like rebalances the whole entire thing. You see that?
Yeah.
It'll come, and then if prices continue to fly up, then it's like, yo, we got to come back here eventually.
Damn, my brain just farted.
So we come back, right? So that's where this guy comes into play, right? You guys know who this guy is. That's why I put this guy all the time, because like it comes back and it tickles his neck. You know what I mean? It scratches his head, gets him all excited, and then, you know, on the flip side of him, flip side, like we got this stuff up here, and that's another topic for another day. I know you guys want to know about the penguin indicator and stuff. It's some serious stuff, man. We learned it from Richard Wyckoff himself. Just kidding. Shout out to trading people for putting that penguin here, man. If you're not having fun with trading, then I don't know what you're doing. Oh shit. Okay. So I know what they're drawing right here. Whoever's drawing this. Yo, we got yo, Cash. I'll DM you, bro. I'll DM you.
All right, man.
Oh, we got both Cashes on here. We got Cash the Great and Cash TTE.
Mm-hmm.
So yeah, I got you. But pretty much, right, back to see now my brain had a fart. You know what I mean? Now my, because I was gonna say something, but anyways, right? So we design these pockets of money and we take it out. Right. So just imagine, like, literally put yourself in that position. Like, you have hundreds of billions of dollars. Like, what are you doing? You're getting people on the opposite side of your trade and you're screwing them over. Like, this is a bloodbath. Like, this is not pretty. Like, again, like, you know, I used to be very, very serious in video games and stuff. So, like, you got to apply that mentality here. Someone's winning, someone's losing. Like how, you know, how it says, who was it? Clint, who says it? I'd rather be a gardener I'd rather be a warrior in a garden than a gardener in a war.
Bruce Lee.
Bruce Lee, there you go. Bruce Lee said that. So it's like you literally have to have that savage mentality in these markets. Like, yeah, you like literally like fuck your stop loss, fuck your trend line. Like we're hitting all that shit. Like I'm sorry. Like I'm sorry, but that's just how the market moves. Like they have to use retail traders stop losses. They have to use all this money and all this liquidity to get on the other side of their trade. Like this is the only way it can happen is if people get screwed over. So that's why trading is a transfer of wealth from the impatient to the patient. Because remember, as I like to say, these guys were correct, these guys were correct, but they weren't patient enough for money to get behind the move and to enter right here on our signature trade on the mitigation to just ride it, right? So again, it's from point of interest to point of interest. I hope this makes a lot of sense. Drop a 1 in the chat if this is making sense to you. I remember what yeah, exactly. Yeah, we'll definitely go into charts right now and apply this. But I remember what I was gonna say now for whoever was drawing on my screen.
Whack off method.
Yeah, yeah, we call it the whack off method. Because I mean, you know, Richard, you could call him Dick, right? Yeah, it's like, you know, it's whack off. Like that's what it looks like. I mean, we're just being honest, right? It's, you know, that's how Jordan Morgan taught me. So I'm just gonna show you what he taught me. It's the whack off. Right? So right here, right? So honestly, you know, you guys just want to see. Oh shit! What is this? Oh, I was like, what's going on? Chart's still upside down. I mean, honestly, guys, let me just show you how crazy these concepts are. All right. So I know a lot of you guys probably know this, but again, let's look at Bitcoin on the weekly, right? What's everybody doing right here? Everybody's so excited, right? They're so excited. This thing's going to the moon, right? Like it's going to the moon. And people think that, you know, Bitcoin and cryptocurrency is decentralized. Like, no, like they're not decentralized. They want you to believe that. Like, why would you not think that banks manipulate these markets? Like, this is a baby. This is so freaking small compared to Forex, right? So understanding that is like the manipulation is at a whole nother level here, right? But it's the same concepts. What do we see right here, right? You see how price, right, came down on the smaller time frame. You can put my little eyeball right here above this wick, right? Well, we could identify the last up candle before the down move, right? This is the candle that captured previous liquidity, mitigating out of this high right here, exactly like 50%. Well, since this was the last up candle that captured liquidity right here before price just fell, right? Before it fell, well, what do we identify? We start to label our points of interest, right? Simple line, like this is your technical analysis. Follow the money, who moves the money? Yes, exactly, right? Like simple. You identify a few things and look at, like, I just put my line into the future, right? What's right here? I know you guys see it. You see how flat price is right here? That's easy. That's why we bought down here, right? Because of this. Equal highs and equal lows are not your friend. They're not opportunities, they're targets. They are targets, they are targets, they are targets, right? This has to get taken out. What's right above it? Our point of interest right here. Last up candle that screwed everybody over right here before it took a big dump, right? And down here, we're obviously accumulating, but then again, everybody, right? What are the masses doing? You literally must observe the masses and do the opposite. Like, if it's obvious, it's wrong. If it's obvious, it's wrong, right? Everybody's buying this thing. Boom, boom, boom. Right? Everybody bought it. What happened right when it hit my point of interest? Right? It's not an accident. There's a lot of liquidity here, and they had to mitigate out of this. Well, how many pips is that, right? I know a few people in this that are on this call caught this.
Yeah,
right?
Wait. You're telling me that this works in crypto?
Oh, I don't know exactly. I forgot you did crypto sessions, man. I forgot you teach us this stuff.
I thought it was just Forex.
I don't know, man. Honestly, sometimes I forget what pair I'm looking at. I just look at the candlesticks. So
Bet.
it's like, yeah, yeah, man. I mean, have fun. Apply it on. You could trade rice and beans. Do whatever you want, man. Yeah, like it works on everything, right? If you guys are on the sessions again, you see Zachary. This correlates in crypto. This correlates on indexes. For those of you that like to trade US 30 and stuff like that, like it's the same concepts. Again, a trading plan and having rules is understanding, how to be disciplined is only waiting for price to do that thing. If you see it, you trade it. If not, you don't trade it. Losses are inevitable in the market. So again, trading this way, you're trading low risk, high reward, right? If you're using a 1-to-5 ratio, you only need to win, like 30% of the time to be profitable. But then again, like this, I'm not going to guarantee your accuracy if you're not entering at the right places, but this is why we're like 95% accurate. It's because we're taking the quality over the quantity of trades, right? So yeah, quality over quantity, right? So yeah, this is just nasty. Again, if you want to see how many pips that is, how many pips is that, Zachary?
4,200
4,200.
in
Right.
less than 10 days.
Less than 10 days. Right. So let's see. Right. If you're on the session today, oh man, look at all these penguins. What are they doing? I don't know what they're doing.
Congregating on those candles.
Yeah, they're doing something, man. They're manipulating something right there. Right. Actually, let me look at this real quick. I just need to see where this is at right now. Oh man. Yo. Yo, so I'm selling this right now. If anybody wants to sell this. Not a financial advisor or anything. But we can see these equal highs right here. Right? Got completely obliterated by this candle. Right? And then what do we have right here below the lows? We got more. Right? So up candle that screwed these guys over up to here. Right? We can see these equal highs up in here. You see where price is flat? You see all these wicks in here? You see how they just got targeted? Right up to this candle. So what I'm looking for is for price to go below these lows right here. Right? So again, use proper risk management. Don't blow your damn account, over leveraging. That's like the stupidest thing ever. Yeah, but I mean, if you want to drop a 10 lot, I would.
They drop a standard.
But do what you want. You know what I mean? Again, like I said, not a financial advisor. But
This
again,
shit
I am
popping.
trading this setup. Yo, Z, what's good, bro?
This shit popping.
Yo, talk to me, bro.
Shit, I just seen that, and then I see a fucking penguin about to come up on gold. It's in the process right now, though.
You see a golden penguin.
Mm-hmm.
All right, so again, guys, if you have to use more than like a 15 pip stop, you're not really sniping. So really get these concepts and just build your confidence. Oh, I don't want 10 pips. All right, so if you want, it's like a 1 to 3 if you want to take it. Right. So you can see why I'm taking this trade. Right. My limit hit right here. All right. Why? You see these highs right here. Boom, they get taken out. This is our point of interest, right? This is that pattern we were drawing. Right? What does it look like? It looks like this. Boom, equal highs, get screwed over, fall down, mitigation, previous liquidity, fall to take out the lows. All right, equal highs, take out everybody, fall, design liquidity, come up, mitigate previous liquidity and equilibrium, take out the lows. All right, so that's what I'm looking at. But yeah, that's that. I just want to check up on that. So Euro JPY. So this is just beautiful, right? So what can we see, right? Oh, actually, let me see. I want to check out the chat real quick. How do you determine how deep your TP should be the past previous lows? Well, what I look for is wicks, right? I'll look for, like, for example, since we sold right here, right? This would be TP1 below this wick, TP2 right here, and then, you know, I don't think we're getting to TP3 right here. But that's where I look. I just play structure, right? Yeah, previous point of interest. That's cool. That's cool too. Chance called you. I want to learn from you trading spiritually stable. Yeah, Jackson. Yo, so yeah, so for those of you that are messaging me privately, there's like a lot of them. Again, if you guys don't have my Instagram, message me on here. Send me a DM. Trade with Matthew, because there's like way too many messages on here. But let me see if I remember. Yes. Cool. Okay, yeah. So again, what is it that we're looking for? Well, we can see what price did right here, right? We see these highs up in here, right? Price is just flat. This is all equal highs. Nothing crazy happened right here. What do we wait for? We wait for
Equals high to get taken out.
yeah, we wait for it to get taken out, right? Right. Where was oh, right? So all these highs get taken out. All right, I could delete this. All right, you can see where price is flat. You see the equal highs in here, right? Then on the flip side, this is what you have to understand is that, like, again, put yourself in the position like you have unlimited money, because you really do. Like, you really do, right? So again, smart money is on both sides. The accumulation and the distribution could literally be right next to each other. So again, that's why we see, right, from mid-beef, you have to print this pattern in your head. Like, this picture was my lock screen for like 8 months. So again, here's, you know, double bottom, spring, right? Spring. This would be your what? Your test, right? You guys see it? Double bottom, spring, test. Why are we accumulating? What are we about to go target?
Equal highs.
Yeah, we're about to go target all these highs up in here, right? We're about to take out all the noobs, right? So look at accumulation, easy accumulation phase, right? We start walking it up candle. Yeah, there's a whack off right there. Look at so, oh man, right? So we see this candle right here. This candle, we could consider it the candle that what?
Did that thing.
It did that thing, yes sir. Right, so let me just put my magical line into the future right here. All right, boom, last up candle before price just completely fell. Right, so again, right, since I saw that this captured liquidity above these highs, where's my target to the downside? Well, it would be right here, right, below these lows, below this wick, since this was the spring, right? So your previous entry will then turn into your next take profit, right? Because you're buying to sell and selling to buy. Eventually, you're going to be in buys and sells on both sides of the market. That's really the goal. So again, if this was your entry on the spring and you're targeting these equal highs in here, and you get the liquidity grab and price falls and you enter this sell, your target would be here, right, under the wicks, because that's where a lot of money's at, right? So that's where money got behind the move, all right? And then boom, price just falls, right? It just completely falls. And you can see in here, right, we got no like real mitigation out of it, right? We didn't do this yet. We didn't do this. We didn't get this right here, right? So what price likes to do is when it does that and it just falls, right, it makes an impulsive move. It likes to just hang out right here and consolidate and create equal highs inducing more sellers in the market, and then boom, it gives them what they want, right? So right here, again, where price is flat is where a lot of money's at. So that's a target for the future on the buy side.
Just hit that high right there.
Right? Yes, sir. So boom. Right? We see this liquidity right here. Right? Up in here. Right? Again, the algorithms have to get filled. So that's why this whole structure thing is like paying attention to it is you see how we had this right here. It fell and then it pulled back up to revisit like these wicks, right? Because that's how the algorithms work, or else that would be what? What would this be considered if price didn't fill this right here?
Imbalance.
Yes, sir. It'd be considered imbalance because there was, you know, there would be no buying or selling offered here, but there was. They came back to fill it perfectly, right? To fill the imbalance, right? So we get the impulses move down, right? And then these reversals, right? These reversals right here, what do we identify that where money got behind the move? What do we identify?
Price move up.
Oh,
Last down candle.
right, last down candle for the up move, right? I could put it right here. I could put it at 50% of the candle, whatever, right? It's just a point of interest. Like we just know when price gets in this area, we're gonna, you know, load the sniper, cock it back, and get ready to pull the trigger, right? So again, since we're accumulating here and we see that money got behind the move, what is it that we're doing exactly? Well, again, how many people can you get on the opposite side of your trade, right? So we see these wicks in here. We come up exactly to it, and look what we do. What do we create?
Equal highs with
Right?
all
So,
same high.
Yep. So everybody's selling this, right? That's what happened right here. They're selling this. And then you see this wick right here. So we got no real mitigation out of this area, right? Just like up here, right? So, right, we have the equal highs. It pulls back to technically where they started to sell, but not exactly to this candle, right? And price flew up, right? It flew up and it just captured these highs, and then it just continued. And what did it do? It captured these highs right here, right? Well, this candle right here could be considered your point of interest for this area, right? Like this whole entire area is just relevant, right? Because it's not, this could be like a temporary one or in the future, right? Well, in this case, we identified that price started stalling out, right? Around these previous highs right here, right? You can see this in here where price is flat, right? So what do? Right? Well, we create equal highs and equal lows, right? So this would be our distribution, right? Because we're moving up and price starts to consolidate, and then what does it do right here?
Goes up.
Right? This candle screws everybody over, right? Right here that was selling this, right? People were guessing right here because they were trading this double top right here, and like this whole structure is like a break and then like a retest, and they're selling it, right? That's exactly what they're doing, right? So then we get the move down, right? Since we're distributing right here, we see we got the spring, and then money got behind the move, right? Started going down. Our target would be, right? You have to think like smart money. So think your targets are equal lows and equal highs. So there's TP1, here's target 2, target 3, right? Under random wicks like this, there's a shit ton of money, right? Like that's a huge target under wicks like this, right? And then remember, we didn't get mitigated out of this position. So that's why we have it in mind, right? We didn't get mitigated out of this, right? So what starts to happen when we approach our point of interest areas? What do we start to design?
Equal highs and equal lows.
All right, we design liquidity, right? Right above the point of interest right here, right? We start accumulating, right? This is what is this considered right here? A pocket of what? This is just a huge pocket of money right here, right?
Pocket of money.
Pocket of money, right? We all like money, right? So this is the last down move, down counter for the up move. This was our target. We see we approached it. We started to consolidate, but we're accumulating here because we have this candle in mind, right? We're looking left to get right, right? So what happened right here with this candle? Who got excited right here?
Buyers.
Buyers got excited, right?
Yeah.
Buyers got super excited, right? And then who got excited right here with this candlestick, with this doji?
Sellers.
Knobs, right? So, right? So look at, you get a doji candlestick, I'm gonna press the red button. I mean, cool. You know, I mean, if you're waiting for it to close, I mean, you know, 70 pips is nice. You know, that's the thing. When you're trading this way, you can literally, like I say, that's why I keep saying, put yourself in that position. You can sell to buy and buy to sell. Like you can literally sell this move down because you know these lows are here, close that position and then buy it up, right? So again, put yourself in that position. Like you are the one manipulating these markets. Why don't you put your account up before the ones you use for a POI? Okay, cool. Yeah, I'll put that for you, Joel. Right. So yeah, point of interest. Right. Cool. So again, we start to approach it, and like I said, or we were going over earlier, is we design the equal lows, and then what do? We push down to go to our most recent point of interest, right? Well, this right here, consider it your last down candle before price got up. How can you tell money got behind the move?
That impulse move.
Right? Right? They mitigated out of that position, and then you got the fast move up, right? And then what happens, right? Remember what we just went over. This is your accumulation, your spring, right? On the smaller time frame, you didn't really get it.
Isn't your point of interest on top of that last down candle another like point of interest?
Where's that? What are you talking about?
Like right on top of there, yeah.
Right here?
Yeah, right on top of that candle.
Oh, yeah, exactly. Right. So this would be considered my point of interest, right? This was the candle that captured liquidity, went into the pocket of money to the last point of interest, right? Just like what we've been going over, right? It did that thing right there, right? So money got behind the move. It broke the whole structure, but we didn't get a mitigation, right? It broke the whole structure. So what do we wait for?
Retest.
Right? It retests the whole structure, right? You see that? See this last high right here? You see how it broke past it and then it came and retested this because it had to fill it because that's how the algorithms work, right? So these are like steps, right? But then again, we're keeping this candle in mind. We didn't get mitigation. So that's how we know from the upside, this is a target on the downside, right? So we see we created the steps. And if we're looking left, again, our targets is liquidity, right? We're identifying liquidity, which is right here. You see above this wick right here, there's a lot of money sitting right there, right? Remember, our last entries turn into targets. Previous entries turn into targets, right? So we're accumulating, we're walking it up. We identify that we're going up to take out this high. Why do we have this high in mind though?
Because we got to take out that last point of interest before that one, that main one right there. Yeah.
Right there, right? So right above the highs, right? What do we start to do right here?
Equal highs.
Equal highs.
Equal highs, right? Boom.
Aye. You're
right? We got the highs right here, and then what does this do? This is a
best thing.
It did that thing, right? It went above the highs, captured liquidity to that most recent point of interest, right? So boom, that's why we entered right here, right? Point of interest, captured liquidity, point of interest. We created the equal highs. When we approached it, we captured liquidity, right? So if we didn't get this snipe off of the mitigation from this institutional candle or point of interest, I got you, Joel, right here. I'll put it again for my bro. Boom, right there. Right, if we didn't catch this, right, which a lot of people did here, what do we get in on? What do we wait for?
Test.
The mitigation, right? So what was the last up candle?
Mitigation and test, that's not the same thing, right?
Yeah, it is. It's the same thing.
Oh, okay. Yeah, I was tripping.
So look at what do we create, right? Equal highs, boom, price flies above to that point of interest way over here, right? And then how can you tell money got behind the move?
We flew down.
It fell down, right? So then what do they design, right? After the impulsive move, you see these highs that they created right here? All up in here. These equal highs right here, all these wicks.
Mm-hmm.
What's right above that? Another point of interest, right?
Yep.
So this is our mitigation, right? So where's our target for this?
Those lows.
Right? Right. So first target was here. We hit it. Second target could be here. And then what we could look for is another buy entry up in here for this point of interest. And then what? Our last entry would be a target.
Yo, Matthew. So right now
Yeah.
with EJ kind of doing a little retrace, so those last equal lows that was taking out, right a little bit up, or up a little more, right there.
Yeah.
That's pretty much just testing that last equal low, right? Or do you see it come back a little bit higher where current price is now?
Well, yeah, I'd like to see it pull back up right here. Maybe we get a pull back up into this price right here. Like,
Balance.
yeah, like right here.
Makes sense. That's what I was thinking too.
Right. Yeah. Because think of it, it's like steps. Oh, shit. What's that? It's like steps, right? They walk it down, boom, equal highs, capture, fall down, create equal highs, go up here to hit this last up candle before price fell. And then they walk it down to capture all these lows right here.
Beautiful.
Right. So
Hey, Matt.
it's like steps. Go ahead.
Hey, on Euro NZD, can you go back to Euro NZD?
What's it doing?
Can you go to the 15-minute chart? Would you consider it that candle up there, the FU candle, just because we took out that wick, or what would you say? Because I see that big FU candle on the 1 hour, but then once you start going to the 15-minute, that's when I sometimes get confused with my entries, just because I see the.
Yes. Yeah. So what I like to do is I like to measure it 50% too. So entries right here. 695, 6945, around there, because you want to see the candle that did it and you want to identify the previous high. So this would technically be like an equilibrium right here. But yeah, on the smaller time frames, I see what you're saying. And then again, that last up candle is kind of like around that 50% area.
Okay.
Yeah, this is why I said, don't go ham on this shit. Like, you gotta wait for it. Yeah, because think of it like this: you can have a limit right here, and you can have a limit right here. Like it doesn't matter. Like the thing about trading is, so many people are afraid to like lose. Like you can't like second think anything. So obviously you have to have your confirmations lined up, but you have to put it. You still want to buy? So you have to put it like on the table. Like trading is, you have to put your risk on the table. So if you're using a proper plan, you can lose more than you win, but always win more than you lose, if that makes sense. Right. But then again, like you don't need to worry about that when you're trading this way. But yeah, I would see it come back up here more. It's funny, I look at like so many charts, I get like data overload sometimes. Let me see. I'll go over this for you guys real quick.
Beautiful.
It's gonna make a lot of sense. All right, so what do we have right here? All right, what do we have? Equal highs, right? All up in here. Price flies up, right? We identify the last up candle, right? Before price fell, right? We can mark it right here. Again, this is the weekly time frame, right? And then price fell, right? We're not going to focus on this too much right here, but there's accumulation, right? We tested that, and like we're walking it up like steps, as we could see, right? But in here, again, like from here to here are like equal highs, right? There's a lot of wicks right here. So that means that's a lot of money, right? We're accumulated right here. Like you can see, right, we're on the weekly. You have to be able to see it like on all time frames. Is you have like a double bottom, and then that's your spring, and then this is your test. So to go up and target these highs right here, right? But right here, this candle right here was the point of interest. It hit the point of interest right here. So technically, this is the candle that screwed all of this liquidity over, right? So this is the last up candle before the down move, right? And again, remember, your point of interest could be at the wick, the body, and 50%. You know exactly where it is you're looking for your trades. You can't be like too, I don't want to say greedy, like you got the area correct, right? So boom, right? This is the last up candle before the down move. This is the last up candle before the down move. You see, once we start to approach this, right here, Joel, I got you right here. I'm gonna put this right here for you, right? So POI. Right. So what happens once we start to approach a point of interest? What do we start to design?
Equal highs.
You can see it right here. You see all these wicks in here, looking like an easy ass clap, right? So look at why, and you know, a lot of people in the chat, you know, like we knew about this, like we were waiting for this to happen, and we got it right there at the wick, right above the highs. Price fell. So technically, this candle right here, what did this candle do? Someone say
liquidity.
Yep, it did that thing.
Did that thing.
Yep, yes, sir. So if this is the candle that captured all this liquidity and we got this impulsive move to the downside, what do we do?
We're filling in balance and mitigating back to that up candle for the down move.
Yes, perfect, bro. Right? So, right, we create these highs up in here. Look at that. Price goes right above it. Right here. Right? So on the weekly, again, it's that picture right here that we drew, right? It goes like this. Cool highs. Boom. Oh. Well, why is it doing that? Oh, they don't want me to show you. Damn. It's all curvy. Right? So if these were the equal highs right here, right? And that happened, and we saw that it hit our point of interest, and we could see that money got behind the move, impulsive move that captured these lows. What are we waiting for?
Retest.
Yes, yes, yes. We're waiting for the mitigation, our point of interest, right? This would be our point of interest right here. Right? Boom. Right? We approach it. And then, boom, we unload a clip, right? We just pull the trigger. And then, boom, price comes down to capture these lows. And then it comes back to rebalance it, right? Well, what does this look like to you?
The same thing.
Right here, right? See these highs? This candle captured that. And then you get the impulsive move down here, right? So this target right here was a mitigation, equal highs, test, come back up, mitigation for here. But then here, this is the candle that captured liquidity right here. And then you get the impulsive move down after it captures liquidity. Smart money gets behind the move. We create equal highs. We pull back up to mitigate from this candle that mitigated out of this candle that mitigated out of this candle. Right? So it's like steps. They're walking it down. Boom, 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 boom. Right? Every single time. All right. I hope that makes sense. Right here, right? We could just go through here real quick. So we see this high up here, right? This is our point of interest on the weekly, but you see this huge impulsive move to the downside, right? What does this look like right here? What is this price action considered?
Inefficient.
You'd say yes, correct. Inefficient, right? So there was no buying offered right here, right? Last buy was offered here, right? You can put that into the future, right? Boom. So that's inefficient, right? Price has to come and rebalance stuff. But again, focusing down here, right? We pull back up into the zone, right? But we see these equal highs in here. You see the highs that got created right here?
Yep.
Right? This candle goes up, captures all of that, right? This is the candle that the last up candle before price fell, right? So then if this was accumulation, then this turns into distribution. Our target was right here, right? Below these lows. And we got that, right? Price pushes down and we identify right here, we are accumulating on a smaller time frame. Again, this is the daily. You have to understand the bigger picture. So what do we identify before the market reverses? We have our last down candle before the up move, right? Well, you know, if this one right here and this one right here, right? Again, we start to approach the last up candle before the down move. What do we do when we approach a point of interest? We design what?
Equal highs or lows.
Right? Because this is our point of interest right here. Last up candle for the down move. Look at, you can see it. It's clearly defined every single time. Right? Boom. What do you know? There's your up thrust after distribution. It does that thing again. Right? There's your distribution. It goes down. Where's it going down to? To this point of interest, right? We create equal lows in here. We spring down, we test, and then price goes up. So if we're accumulating down here, we're going from target to target, right? So if we bought this right here from this point of interest, where's our target? Our last entry, right? It's right there, like above the wick, previous liquidity. All right, now that's liquidity right here, right? And on the smaller time frame, you can see this was an M up candle, and we mitigated perfectly out of it, and then it fell, right? So again, right there, and then vice versa right here, accumulating, spring to this point of interest, and then we fly up to take out this target here again. But why are we're not only just taking out these highs, right? Because these turn into equal highs. We're going to fill this inefficiency right here, right? Where there was no buying offered up in here, right? Price comes down. Again, designing highs. Look at right here. Like, you could just see it, you know, just implant that picture in your head, keeping it super simple. What do we have here? What does this look like to you? We're on the daily. Double bottom, spring,
liquidity.
And this is your test. Yeah, exactly. So right here, right, this is where they started selling down. But again, price has to come back, right? If it breaks the structure, it does what? It comes back and it tests it, right? So as we can see right here, we designed these equal lows, right? So that's like your double bottom. Again, just imagine this, right? It looks like this on a smaller time frame. Damn, this thing's really tripping. right? It looks like a double bottom, right? And then this is your spring right here, right? That's the candle that screws everybody over. And then what's the mitigation? That's the play right here on the smaller time frame. It comes and it tests it perfectly, right? Double bottom, spring, test. Target is above these highs right here on this side, right? There's wicks right here. So again, I know this is the daily, but that's over 100 pips, you know what I mean? So even to this last up candle right here, price falls. But again, it's like understanding the fractals of it. Like all of this stuff happens on the weekly, daily, 4 hour, 30-minute, 15-minute, 5-minute, 1 minute, right? Like I'm going over the daily, and all this stuff happens on a 1 minute time frame. I don't want to go too far into it. You just have to understand the overall conception of it, because as above, so below. It's all fractal geometry. It's the same picture in the whole entire. So right here is your double bottom spring test. Go up here. Again, something I want to show you guys, which is really cool. It's right here again. Accumulation, right? Here's your double bottoms in here. This is your spring. And then price just flies up. But right here, right, if we go to the 4 hour, right, you can see right here. Check this out. This is on the daily again still. So you see this down candle before price flew up, right? You see that? Point of interest right here, right at the body. Boom, right? You could have bought that up right here, right? You could have bought it up. Right, on the pullback, that's our mitigation from this candle right here. Last down candle, up move, boom. You could have bought it up right here. Again, you know, some light, that's only 100 pips. But right here, on the 4 hour, you know, after everybody's getting induced right here, what do we wait for? Right? What got created, right? We could identify this one on the 4 hour. This is the last down candle before price just flew up, right? And what got created right here? Yes, sir. Right? So this is our pocket of money, right? What's right under our pocket of money?
Point of interest.
This is hilarious. You guys hear Siri?
Yeah.
She's playing about the money, T.I. and Young Thug.
The last shit. The
Oh, we're
last
gonna listen to it for a little bit. All right, but look at, you see this pocket of money right here, right? Right below it is our point of interest. I count 6 shots. Right here, boom.
Hey, pew 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 pew
Right there,
pew
bro.
pew.
Signature trade every single time. Liquidity gets designed in our point of interest. We capture it, and then we go up, right? Where's our target in our accumulation phase? Double bottom spring, boom. Where's our target? All of these guys right here, where this eye's at, right? And yeah, it's just the same thing over and over again, right?
We still waiting on that buy once it hits third, you know. Pew 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 pew.
Oh, I bought it right here.
Oh, you already bought it?
Yeah, I bought it right here. You see how the market opened? You see how it gapped down?
Oh, got you.
Right? So check this out. This gap right here, right?
Yep.
Look at it. What does this look like to you?
A spring and a test.
Accumulation, right? So here we have, boom, equal lows. This is your spring. Where was the last down candle? Right here. Point of interest. Market gap down. What do we do? Boom, 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 boom. Like, just unload a fucking clip, bro. And then where's our target? Look at these equal highs right here. Easy. Took them out. Look at, we took these ones out already. Right? So, and then now it's falling down because it's gonna, you know.
Yeah. That's what I'm waiting for, that buy.
Yeah. So again, it's like fractals, right? Like I entered this on the 1 minute because I saw it and I was like, oh shit, that. you know, because I was looking left, I was targeting these highs, and my take profit was literally right here, like right here. So again, I bought right here where the market opened. That's only 65 pips, but again, it's understanding that it's all the same picture in the smaller picture. So if you could understand 4 hour, 1 hour price action, you could understand 5 minute and 1 minute price action. But again, it's quality over quantity, and you know, I am a high risk trader. Like, you know, I like to have fun. I feel like a kid in an arcade sometimes because that's what these markets are to me. It's just a video game. Someone has to win, someone has to lose, right? And it's all about your KD ratio, right? Keeping it in the positive all the time. So again, these opportunities
Yeah,
present
talk that
themselves, right?
shit.
There's
Talk
there's
that shit.
there's you know there's a lot of people like get emotional and tied up. You know, they told us to stay away from smaller time frames, right? But why? It's because people get emotional in there. Like sometimes I could feel people's emotions in the smaller time frames because it's like so many people are in fear and they're greedy, right? But when you're able to observe the masses literally and observe this data on the chart at a very neutral standpoint, you understand that you're like untouchable. Like you are observing everything. And like if you're observing at a neutral standpoint, it's like reading a book, right? So if you're reading a book, you're not going to react to anything. You're only going to respond to what you're observing and the information you're getting in, right? So
Yeah.
Man,
again,
that's why you're gonna love Anti-Fragile, bro.
yeah, bro, I
Nicholas.
gotta read that book. But then you see this, how this was the mitigation from here, right? You see how this is where it got down?
Yep.
Look at where it came and revisited right here for another entry.
Oh shit.
It's like steps. They walk it up. They walk it up. And they walk it down. Every single time. I can't hear who's speaking. It's like a little low, my bad.
Turn off the fucking music.
Oh, that shit was so funny.
Hey, well, what were the fit levels that you were using earlier to measure that 50%?
Oh, you want to see my fib levels? I'm gonna have to charge you for that.
Drop the Cash App.
All right, but I actually got banned from Cash App.
Me too. What?
Yeah.
Same here.
Yeah,
Same, bro.
Bastards. All right, look at, so these are my levels right here.
Screenshot.
Right, so
Thanks.
yeah, honestly, what time is it? Oh, it's like perfect timing. I got a call right now in about 10 minutes. Another one just like this actually, but it's one of our private students. So honestly, like I appreciate every single one of you guys being here. I hope like this whole session, like I know it was a while, but I hope you guys got some breakthroughs. I hope it makes sense. Again, something that, you know, Jordan and the whole trade house told me is that closed mouths don't get fed, right? So, you know, ask questions, seek, and you shall find, you know, ask and you shall receive, knock and it shall be open upon you, right? You're literally the key to everything, right? It's all about the quality of the questions you're asking, not the answers you're receiving, right? It's all about the quality of the questions you're asking, not the answers you're receiving. So again, thank all of you guys for being here. I appreciate each and every single one of you. If you guys gain some value, please drop a 1 in the chat. Shout me out on Instagram, guys. We are aiming to get our own channel on IML TV. So looking forward to that. All right, guys, blow up Chris Terry's inbox. Tell him what's good. Leave feedback on the Power Hour session with Zach and Jordan. And yeah, let's make it happen, guys.
Yo, we almost hit 100 people on this call, dog.
We got it next time.
We got it.
Oh yeah, but yo, I appreciate all of you for real. Like you guys are helping me